the spotlight now on Ramkrishna Forgings. Yes, it's come out with its first quarter numbers, but what you've also seen is the stock do really well the last year around, where it has grown nearly 6 times since the low of 2020. Joining us is Naresh Jalan, the Managing Director of the company. Good morning, Mr. Jalan. First up, let's talk about the Q1 numbers that have been released by the company last week. Give us a snapshot. Is it in line with expectations, and going forward, any guidance you can give us?
I think going forward, I think we are looking for a very good year this year, with both exports and domestic industry reviving more than what we had assumed. I think things are looking much better for next 3 quarters. First quarter is just what we performed. I think in the domestic side, because of the COVID lockdown, there was some disruptions, but overall in exports we did very well. And I think going forward in next 3 quarters, we'll be doing considerably well in both in exports and domestic.
So the domestic market, which you've talked about, has been soft. Has that started improving? And are you now giving more focus to the international business from what you're saying?
Domestic market, yes, from August onwards, post all the most of the lockdowns which have gone by, I think things have started improving the domestic market. But our thrust remains on the export volumes, and Europe and both North American market is doing considerably well. So we are concentrating on the export volumes.
Mr. Jalan, Alex joining in. You've had a great quarter, in fact, and you've also seen margin expansion during the quarter. Is that something that we can expect to see going forward as well, a further margin expansion? Is there scope for that, or do we expect it to hover around these levels?
Alex, I think with the capacity utilization improving, I think the margins should expand from here. Only detrimental is right now the steel pricing. Steel pricing is which we are unable to predict right now. But if the commodity prices do not go up any further from here, we expect margin expansion in every quarter for a couple of years because of the volumes which we are seeing right now in the market.
Okay, so a follow-up to that, Mr. Jalan, would be what range would you expect margins to be in? And the second would obviously be what you just spoke about, which is raw materials. I think everybody's got their eye on it. What is your company and your leadership looking at in terms of the expectation of how much raw material prices will go up in this financial year?
I think, Alex, to be very frank, I think it is unpredictable to gauge what is going to happen with the raw material pricing. But we can only feel that all the increases are passed behind. I think for next 3 quarters, we should not see any major steel price hikes. And we are looking, in case the steel price do not go up any further from here, we are at least looking to a 200 bips further margin expansion from what we did in first quarter.
Mr. Jalan, debt levels, they still remain high. So when you talk about businesses coming back domestically as well as internationally, what is that going to mean for your debt level?
I think right now our entire, to be very precise, we have already done through our capex cycle. I think we have completed most of our capex, and by September this year, our capex is going to be completed and our new plants all will be in operation. So our entire endeavor is to repay debts, and we are looking for at least 100 crore debt repayment from what we ended FY March 21 to 100 crores at least below that what we have ended in.
So you have finished your capex cycle, you're saying. So there's nothing more you need to incur for capacity addition, or you're not planning capacity addition at the moment?
We are not planning capacity addition at the moment, at least for next couple of quarters and going into FY23. We have enough capacities for the demand what we see in the market right now. And we feel that it's prudent with this current upcycle in the market to have pay off debts and be light on terms of balance sheet is concerned.
So what kind of impact do you see that having on your top line in percentage terms, the fact that you have completed with your capex?
I think I cannot put a number to it, but at least from what we ended FY21 March, we should do at least 70 to 80% more than what we have done over there in the current year.
Okay. Can you give us a sense of how the order pipeline is looking and how you expect new deal wins both in the current quarter as well as in the rest of this financial year?
I think our order book is pretty strong, and North American demand, I think with the spend which has been infra spend which has been announced by the current regime, I think we look forward that FY23 and FY24, both the years should be pretty strong in terms of North American demand. And Europe is pretty stable. So all taken together, we have extremely healthy order book. And new order, I think you must have seen, we have announced a lot of orders in last couple of weeks. And I think going forward, we see further order wins going forward.
All right. Mr. Jalan, thank you. Pleasure speaking with you. Seems to be looking very good for your company, in fact, both on the top line side as well as on the margins front. And we look forward to speaking to you again.